The Precious Metals Week in Review, October 16th, 2015. Brought to you by Precious Metals International. Markets continue to be volatile on weakness in global economic data, weakness in U.S. earnings, and escalating uncertainty in the Middle East. The number of Americans filing new claims for unemployment benefits fell by 7,000 claims last week to a level of 255,000 claims, which is the lowest level for that figure since November of 1973. Claims for the previous week were revised lower by 1,000, and the continuing claims figure, which tracks those individuals who continue to receive unemployment assistance after an initial week of aid, fell by 50,000 to 2.16 million. Earnings in the U.S. continue to be disappointing, and global economic data also remains soft as well. The likelihood of the U.S. Federal Reserve choosing to begin raising interest rates in 2015 appears to be receding quickly, despite what appears to be an improving labor market in the U.S. Inflation remains well below the Fed's target, and the American consumers appear to be tightening the grip on their wallets once again, as global economic weakness becomes more apparent to them. Stock markets appear to be taking the weak economic and earnings data as good news, perhaps anticipating not only that the Fed will be forced to hold off on raising interest rates, but may actually be forced to inject more stimulus into the economy instead. Quincy Crosby, market strategist at Prudential Financial, told CNBC, "This is the same story that we've had for so many years now, as the market seems to be instinctively responding to the notion that we're going to have more stimulus and shrugging off questions on earnings." On Friday of last week, China issued a warning to the United States after reports surfaced that the U.S. may be considering sending ships close to the artificial islands that China has constructed in the South China Sea. China's Foreign Ministry spokeswoman, Hua Chunying, said, "We will never allow any country to violate China's territorial waters and airspace in the Spratly Islands in the name of protecting freedom of navigation and overflight. We urge the related parties not to take any provocative actions and genuinely take a responsible stance on regional peace and stability." On Tuesday of this week, U.S. Defense Secretary Ash Carter said, following a meeting with Australian foreign and defense ministers where the South China Sea was a topic of discussion, "Make no mistake, the United States will fly, sail, and operate wherever international law allows, as we do around the world, and the South China Sea will not be an exception. We will do that in the time and places of our choosing." On Tuesday, an official data release from China showed that U.S. dollar-denominated exports fell by 3.7% in September from a year earlier. The staggering figure in the data release, however, was that imports fell by a staggering 20.4%, marking the 11th straight month of declines for imports. Contagion from continued economic weakness in China appears to be spreading through emerging markets, and the steadily declining imports figure may mean that the weakness could soon make its way into the U.S. economy as well. Monday will see the release of the official gross domestic product (GDP) data for the third quarter in China, and many economists are projecting that growth in China may fall below 7%, which would be the weakest showing since 2009. In Japan, the government lowered its assessment of the economy on Wednesday, citing a slowdown in output and industrial production. The Cabinet Office said in its monthly economic report, "The economy is in a gradual recovery trend, but there are some pockets of weakness. Recently, industrial output has weakened." A slowdown in Japanese exports, perhaps a result of China's slowdown in imports, could mean continued sluggishness in the industrial sector for Japan. In Europe, apparently, the threat of the United Kingdom voting to leave the European Union is growing larger. Following a general election which took place in May, the UK confirmed that it would go through with its plan to hold the referendum on leaving the EU, and many analysts at the time felt that Britain would clearly vote yes to remain in the EU. A poll conducted by YouGov on September 28th now shows that 40% of Britons would vote to leave the EU, with 38% saying they would choose to remain, and the rest apparently undecided. Surprisingly, the factor that appears to be the leading cause for the change in sentiment has been the treatment Greece received at the hands of EU leaders during its most recent economic crisis. The negotiations surrounding additional bailout funding for Greece apparently gave Britons the impression that the EU, and specifically Germany, has too much control and power over the rest of the member countries, heavily infringing on their sovereignty. Crude oil slid back into the mid-$40 a barrel range this week as the U.S. Energy Information Administration reported that crude inventories increased by an unexpected 7.6 million barrels for the week ended October 9th. The surprising buildup was more than twice what a Reuters poll projected and may show that the global supply glut is far from over. The euro drifted lower on opening for this week, but almost immediately turned and began pushing higher against the US dollar. The euro had plateaued by Thursday and began moving lower in a series of steep drops, which took it back to just below even for the week. A push higher on Friday appears set to see the euro close the week essentially sideways against the US dollar. The Japanese yen saw a steady move higher against the US dollar for most of the week, reaching a peak late on Thursday and dropping slightly lower. The yen appears set to finish the week higher against the US dollar. Volatility should be expected to continue. Ongoing economic weakness in China is widely expected by analysts to continue into the fourth quarter. Some polls put China's GDP growth figure for the third quarter, which will officially be released on Monday, as low as 6.4%. Consumer prices in China continued to ease in September, and producer prices also remained in a slump. That data, combined with declining imports, is leading analysts to project that Beijing will be forced to inject additional stimulus into China's economy in an attempt to spark a resumption in growth. In the Middle East, the situation in Syria continued to devolve this week. Russia's President Vladimir Putin, speaking at an investment forum put on by Russian investment bank VTB Capital this week, said, "Let me be clear. We are not going to get into leadership. What we are trying to achieve, to contribute to, is a fight against terrorism, which is a threat both to the U.S., to Russia, to European countries, and the whole world. They, the Western Alliance, don't have a clear understanding of what's happening on the ground." Answering a question from a CNBC journalist, Mr. Putin said, "At the military level, we asked them, the U.S., to give us the information regarding the targets that they believe are 100% belonging to terrorists, and what we received as an answer was that they weren't going to do that. Then, the second question was asked. Please tell us which targets should not be attacked by us. No answer received. What should we do then? The first thing we hear right now is that they're not ready to cooperate with us and that we're attacking the wrong targets. I haven't been inventing things. We asked them to give us targets we should not pound, and there was no response." Later in the week, reports surfaced that progress had been made on a memorandum of understanding between Russia and the U.S. for air safety procedures when sorties are flown over Syria. In Asia, as China reduced its foreign exchange reserves and U.S. Treasury holdings in August, it was apparently considering increasing its gold reserves. Reuters reported this week that in September, China increased its gold holdings by close to 1%, acquiring another 480,000 troy ounces, 14.9 tons, to bring their official gold reserves to 54.93 million ounces. That's 1,708.5 tons. China only began releasing data on its gold holdings in June, and the accuracy of the official data has been questioned. According to the data, China added 16.2 tons to its gold reserves in August, which was in addition to nearly 19 tons added in July. As the U.S. rapidly approaches yet another debt ceiling crisis, if China continues to divest itself of U.S. treasuries, it could quickly spark a crisis in the U.S. bond market if other central banks follow suit in the selling, triggered by fears of spiraling debt levels in the U.S. In Europe, it seems to be growing clearer that the European Central Bank, ECB, will not be meeting its inflation target anytime soon. Ewald Nowotny, chief of Austria's central bank and a board member of the ECB, said this week that the ECB is using the monetary policy instruments available, but it is quite obvious that in the current macroeconomic situations, additional sets of instruments are necessary. Mr. Nowotny's comments are the first such indication that more stimulus measures, likely in the form of additional quantitative easing QE, could be on the way from the ECB. According to UK publication The Telegraph, some analysts expect that the ECB will need more than triple its quantitative easing program to more than €2.4 billion if it wishes to overcome the drag of another global economic slowdown. As we enter the weekend, once again it will be important to monitor global news outlets, particularly for news out of China as we await the release of their official GDP numbers. The Middle East will also need to be closely watched as violence escalates further across that region. In the face of heightened global uncertainty, wise investors continue to seek out buying opportunities to acquire additional physical precious metals as part of a well-diversified investment portfolio. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, October 16, 2015. Brought to you by Precious Metals International.